Hello everyone, and a very warm welcome to this lunchtime webinar, Putting Our Money Where Our Faith Is, Greening Our Investments. We're delighted you could join us. My name is Rosie Venner and I'm Director of Movement Building at the JustMoney Movement, a Christian charity concerned with how money can be used for good for a fairer, greener world. Together with Operation Noah and in partnership with Faith Invest, this event is part of a series of webinars we've been running over the past year since the launch of the Green Investment Declaration. You'll hear more about this later, but the Green Investment Declaration is an initiative developed by Operation Noah and JustMoney Movement to support churches and other faith institutions across the globe to increase their investments in climate solutions. Before I introduce our speakers today, a couple of brief notices. This webinar is being recorded and the slides will be circulated with the recording in due course. As we have done previously, we'll record up until the end of the speakers' presentations and then we'll pause the recording to open up for Q&A. Please do make use of the chat to introduce yourselves to each other. It's really good for us and for the speakers to see who is here, but also for you to connect with each other. And thanks to those who've been doing so already. Please also use the chat for any questions that you have. We may be able to answer some of them as we go along, if it's just a quick clarification that's needed, or a link or a signposting to a resource. But we also have a good amount of time set aside for Q&A towards the end of the webinar. If your question is for a particular speaker, please do indicate that, and that will help us when we get to the Q&A. So over the next hour, we'll be hearing from 3 different speakers. Let me give you a flavour of what's coming up. We're really pleased to have James Corah with us, Head of Sustainability at CCLA. CCLA is the UK-based investment firm that manages funds on behalf of the Church of England and other charities and local authorities. In his role, James leads on active stewardship, integrating environmental, social and governance factors into CCLA's investment processes and ensuring that the portfolios are aligned with the values and mission of their clients. We'll also be hearing from Catherine Devitt, Programme Manager at Faith Invest, on Faith Invest's new guide, From Faith Values to Investments. It looks to be a really useful tool for church investors in discerning how to apply faith values to investment policy and practical action. So we're very much looking forward to hearing from Catherine on that. But firstly, I'm going to hand over to Claire Fussell to set the context of this webinar and introduce the Green Investment Declaration. Claire is Operation Noah's campaign director, but she also previously led the Climate Coalition, managed Christian Aid's campaign team, and served as environmental advisor for the Diocese of Bristol. So she brings a wealth of church, climate, and campaigning expertise. So I'm going to hand over to Claire now to give some background to the Green Investment Declaration. Thanks, Claire.
Thanks so much, Rosie, and welcome to everybody. Really great to see you here. As Rosie mentioned, the Green Investment Declaration was launched last year, and it's designed as a tool to help churches and faith institutions such as religious orders or faith charities and trusts to take practical steps to align their investments with their faith values and ultimately use their money to have a positive impact in building a better world, and specifically in this instance in tackling climate change. And Operation Noah, like JustMoney Movement, is a Christian charity, and we work with the church to inspire action on the climate crisis. We work across all denominations to try and provide leadership and inspiration in response to the growing threat of the catastrophic climate change that we all face. And on the next slide of the Green Investment Declaration, I've included a quote from one of our early signatories, which is the Society of the Holy Child Jesus, who came on board quite early on to become a signatory to the declaration as part of their journey towards greening their investments. And I think that this is quite it sums up this quote, really, I think, why it's so important that faith bodies align their financial investments with their faith values and principles. They talk about how it's so important to them that their investments are aligned with human dignity, the care of the common home, and the values that flow from this: justice, peace, and compassion. And I think it's so important for faith groups to think about, firstly, ensuring that their money does no harm, but then secondly, going beyond that and trying to ensure that their money does some good and has a real world impact. So the declaration asks churches and faith groups to do three things, and I think you can have a little preview of the declaration text on the next slide. Firstly, to make a plan for investing more in climate solutions, and that might be around reviewing your investment policy or creating one to ensure that it reflects that wider ambition to use your assets and resources to tackle the climate crisis. But secondly, then to start making investments that have that positive impact. And then thirdly, and crucially, to communicate this widely and to speak up in wider society and use that moral leadership that churches and faith institutions have to allow space for others to follow suit and to increase their investments also in these areas. And I think it's important to stress just how much financial and moral power and influence faith groups have. And I think that we'd argue that they can't afford to stay silent on this issue. There's a real opportunity to take action and encourage others to take action. And globally combined, faith bodies manage around $3 trillion, which is a huge amount of money that we have huge potential to shape the world with and to build a greener future. Not only through direct investments, but as I said, through making that wider case for the moral case for others to follow suit. And a couple of years ago at Operation Noah, we published a report on church investment in climate solutions. And in that, we shared that if the world redirected the $570 billion of annual planned oil and gas investments towards renewables instead, that this could fully finance the wind and solar energy expansion that's needed in line with the 1.5 degrees C target of the Paris Agreement. And while that 1.5 degree world is seeming increasingly difficult to achieve, it isn't entirely out of the question. We know that 1.5 degree warming has already happened, and but exceeding this temperature in a single year doesn't mean that the target is entirely failed and that we need to lose hope. Every 1/10 of a degree matters, and we really need to be taking urgent action to reverse warming trends. And one way we can do that as faith institutions is to play a role in that transition, moving our money out of fossil fuels and into climate solutions. On the next slide, it outlines the three levels of the Green Investment Declaration. They're rather neatly labelled acorn, sapling and oak as your investments grow over time. And it's very much designed as a journey where you don't need to have a huge amount of money, and you don't need to have a huge amount invested in climate solutions already to sign up and demonstrate your commitment to doing more in this area over time. So at the acorn level, signatories just need to have made a commitment to start investing in climate solutions over the coming couple of years. The sapling level is for institutions that have already started to make and communicate their movement of funds into climate solutions. And then at oak level, they're kind of churches and faith groups that are already on the journey. They've already committed to invest more in tackling the climate crisis and have plans to increase that even further. So it's very much a journey through which churches can grow their investments over time. And there are 25 institutions currently, I think, in the process of becoming signatories at various stages of conversations within their finance committees and boards. And there's a few examples here of some early signees. The Diocese of Truro have about 10% of their portfolio in renewables. Society of Holy Child Jesus, who we mentioned earlier, have opted for a Paris-aligned investment solutions for charities, as well as a multi-asset fund designed to have positive impact on people and planet. And the Quakers in Britain have also led the way for a number of years on ethical investment priorities, and they're sort of leaders in a sense in this area. And I'd encourage you to have a look on this web link at the bottom here, and that will be shared in the email afterwards as well. There's a whole wealth of materials on the Operation Noah website to help support churches or dioceses or districts or synods or conference, depending on what denomination you're in, to start to make that commitment to moving funds into climate solutions. And we're here, Operation Noah and JustMoney Movement, together to help every step of the way to advise and provide information like that given today. And I'm delighted to hand over to James Corah from CCLA, who will be telling us more a bit about their approach to greening church investments. And I'm really looking forward to hearing that and having a conversation afterwards. So thank you, and over to you, James.
Thank you so much, Claire, and thank you everyone for joining, and thanks for the invite to be with you today. I guess one of the things I wanted to do in the next 15 minutes, if that's okay, is let's talk about our approach, because there's nothing more self-serving than an asset manager talking about what they do. When they do that, you should definitely treat it with a sense of cynicism, but kind of talk a little bit about some of the concepts and the danger signs in terms of trying to implement the pledge and what to watch out for with your asset manager, if I may. So if I can move to the second slide of my pack, and I'm sorry, there's a lot of clicking through this. Our sector, the kind of sustainable finance, ethical, responsible, socially responsible part of the investment industry, whatever name you want to use for it, is somewhat under challenge at the moment. It is a sector that was very fashionable a few years ago, but now seems to be less so. And of course, all of the pushback we're getting from the United States and parts of the UK as well is really diminishing to some extent what ESG, the idea of investing with environmental, social, and governance factors in mind, really stands for. And one of the things that Claire, I was thinking about while you were speaking is that you used that word moral case. And what we know, for those of you who don't know, I did a PhD on kind of faith investment before I joined CCLA 15 years ago. When you look back into the history of this sector, it was churches and people of faith who created the idea of trying to use money to make a difference, as well as kind of make that investment return. And what's so exciting about this moment is it feels right now, as the sector is challenged, it is people of faith who are stepping up to really try and reclaim its transformational powers. So I'm really, really delighted to be working with faith investors more than ever before. So you're not alone. The FCA did some polling a few years ago, which showed 81% of their adults surveyed would like their money to do some good as well as provide a financial return. So we need to make sure we're building as big a coalition as possible. Now, if I may, I'm going to move to the next slide and talk a little bit about some of the dangers of metrics. And I'm afraid there's a lot of clicking in this. Now, it's lunchtime, so I wanted to use an analogy. So if I could have the first click, please. I know it's very hard for those of you looking at me on screen, but as an athlete, I obviously don't eat this junk too often, but just imagine every Wednesday, I go down to the restaurant on the 6th floor that serves burgers. And I have 2 burgers. So if you click through again, so 1 + 1 = 2. And what would happen if every Wednesday I ate 2 burgers is that I would dramatically put on weight. Now, one of the things is with climate change, we could be slightly creative with some of the metrics that we use. So moving forwards, just imagine on that Wednesday, I chose not to have one of those burgers. What would happen? So moving through to the next slide. So I have the 1, first click, but I avoid having the second one. Click. So what that means is, well, I've had 1 burger, I've avoided having a second burger, and the way that emissions counting goes, that avoidance means I can take the 1 away from the 1, which means in reality, a couple of clicks, please. One more. In reality, I've had no burgers. Now, this is absolute nonsense, of course, but it's the way that some of the metrics work in investment. So whilst I'm still having that burger, this idea that I avoided one means that I've had none. It has no relevance to the real world at all. I'm still eating that burger and still gaining weight. And the issue that we have here is this is the way that some of the metrics the asset management and investment community work in terms of climate change. So when you're looking at some of the kind of carbon removal techniques, just make sure that they are actually genuinely removing emissions. And this is important when it comes also to the Green Finance Pledge. If I may, moving to the next slide. It is, of course, absolute nonsense. Moving to the next slide, you have to be careful where your money is going. So we do need to massively increase the flow of finance to genuine projects that increase the ability of the world to transition. But that means, in finance jargon, providing primary capital. Now, it's really important to remember the difference between primary and secondary capital. Now, primary capital is investment that goes into genuinely scaling up new activities. It's like kind of going out there and putting a loan in place to make something happen that wouldn't have happened otherwise. But if you buy stocks on the secondary market, on the exchange, you aren't necessarily providing climate action. So you might feel like you're making your donation, your kind of contribution towards hitting that 5% target. But actually, all that money is doing is going into the secondary market, providing liquidity, meaning you're buying it from someone else, and doesn't allow that business to scale up its activities. So when you're looking at how do you dedicate that capital through to achieving the green finance pledges goals, we've got to look at the means to which you're doing it. And just buying companies that already exist on the listed equity markets isn't genuinely scaling up activities. It's just altering your portfolio and providing liquidity. Now, one of the FCA, our regulators' pledges at the moment is to try and look at how can you accelerate this transition of finance into areas that need scaling up. But one of the problems with the majority of charity funds out there, the charities authorized investment funds, are that they do not allow investment or have very tight rules in regards to investment in primary capital because they're relatively illiquid, which means that the majority of those core products actually can't provide that primary funding in the way that we really want to happen. So the second part is, one, you've got to find innovative ways of doing that. The second part is how can you make sure that all of your assets, not just that 5%, are genuinely committed to and aligned with trying to make change happen. And for us, that's where engagement comes in, because through that, you can genuinely drive change. Now, there are two ways that you can try and change your portfolio's climate metrics. One, if I can just click through until you finish clicking through all of the diagrams, I can promise this slide made more sense and was easier to use before our marketing team got their hands on it. Anyway, so what happens is you're trying to decarbonize your portfolio. So you begin on the left here of your pre-decarbonized portfolio, symbolized, which is quite carbon intensive because you've got those 3 clouds of carbon. That's what carbon looks like if you work in the marketing department trying to put slides together. The 2 routes that you can go trying to achieve this is one, what we call transactions, which is in essence where you go through your portfolio, you find the high carbon stuff and you sell it. And the outcome from that, of course, is your portfolio's emissions drop dramatically. So you've gone from 3 clouds of carbon to 1. But the outcome is, just like if you're only buying things in the secondary market, if you're only selling things on the secondary market, there's no real world emissions outcome. So your portfolio might look cleaner, but those businesses that you have sold have carried on polluting in the way that they were doing before. So you've altered your portfolio and you've not necessarily had that change that you want to see. The second way you can go about doing it is a way about actions and engagement, which for us is the bottom line, where again, you go through your portfolio and again, you're going to want to sell companies that you feel cannot change. Now, for us, that includes the oil and gas majors and several kind of other parts of the industry which genuinely cannot decarbonize. You shouldn't use engagement as an excuse to hold businesses that will not change. But for the rest, you get in, you build up your relationship with them, you try and understand management, and hopefully over time through that dialogue, coupled with public policy engagement, you begin to drive change in the business. So whereas before, when you sold all of those high carbon companies, you had a drastic change in your portfolio emissions. This time you've not had a massive one. It's now down to 2 clouds of carbon rather than 3, which reflects the fact that engagement is a gradual change process, recognizing that every minute and every minute matters right now, but it's a gradual change progress. But hopefully you've achieved some of those emissions through genuinely changing company practice, which means that you have genuinely had that real world emissions outcome. So I think if I can move to the next slide, using an investment industry buzzword, what we've got to look for both through the pledge and also trying to make sure that all of our assets are driving change is how can we achieve additionality? How is it that we can make our assets make change happen that wouldn't necessarily happen without us? Which means looking slightly beyond just what's in your portfolio to trying to see what actually you genuinely have made happen. If positive financing and implementing the pledge makes things happen that wouldn't have happened before, that's additionality. If engagement genuinely changes companies' practice in a way that wouldn't have happened before, that's additional. So I think we've got to move beyond this idea of just looking at what companies already in your portfolio do and really question what is it that we have made happen. So dare I say, just moving to a couple of the last slides, when it comes to engagement, for us, there are a few things that really matter. And the ones that I wanted to kind of point out here is data and performance measurement. Engagement has and continues to be used as an opportunity just to, dare I say it, slightly greenwash portfolios to diminish people's concerns about what's in it. We have to measure change. So we peg all of our engagement to the Transition Pathway Initiative or CDP data so that we can actually see what impact it's having. We need to make sure we're using our votes in a way that signals that we want change to happen. We need to get in there and meet management. We need to be talking to governments in terms of policy engagement, which of course is much easier in the UK than it is in the US right now. And also we've got to be creative in terms of shareholder proposals, the threat of divestment, and genuinely moving the industry forwards. So for us, one of the things that we're really looking to the industry to get behind and you to support right now is an initiative we're running with the Local Authority Pension Fund Forum, which is called Climate Transition Voting. We're calling upon all FTSE 100 companies to put their climate transition plan to shareholders at the annual general meeting for support. That's not just because we think investors are going to go out there and play a really critical role in assessing them. Our experience in the investment community right now is underwhelming. But what it does mean is that companies have to be very transparent in terms of what their transition plan is, go through it rigorously, and make sure it's absolutely up to stuff in terms of what it's trying to achieve. So for us, at the moment, about £3 trillion of assets under management are supporting that initiative. We need to make sure that companies are much more transparent in terms of how they plan to transition. So dare I say it, just to finish off on the final slide, what does this mean for your portfolios? I think it means that we have to support the pledge. Some of us find it easier than others. For us, it's very difficult for us to do that funding pledge in the way it is given the regulatory mechanisms. But for those of you as asset owners, you have to find the vehicles to fund with your 5% that are genuinely going to make a difference. Don't just take the word that we've bought this green stock. Actually ask what is happening on the back of your money that wouldn't have happened otherwise. And for the rest of your portfolio, making sure everything is aligned. And for us, that means unleashing the power of active ownership alongside targeted divestments, and then making sure that that engagement is genuinely driving change. So for us, we couldn't be more supportive of what Operation NOAA are doing in this area. We just need to make sure that it is genuinely achieving the transformative change it can do. And again, it's great to see faith investors standing up at this time when we really need to reclaim sustainable finance as being something that genuinely makes a difference. And I'll finish there.
Thank you so much, James. And we really appreciate you taking the time to go through some of the broader issues and questions surrounding how to have an impact with investments, looking at portfolios as a whole, as well as the impact from that 5%. And I'm sure there'll be some questions to dig a bit deeper into that as we go on. But thank you again for taking the time to do that for us. We're going to hear from our third and final speaker now, Catherine Devitt. Catherine leads Faith Invest's programme on faith beliefs, teaching and values. Many of you will know Catherine from previous webinars, and the team at Faith Invest have been very supportive of the Green Investment Declaration. And we thought it would be helpful for everyone to hear a bit more about this new updated guide for faith-based investors that Faith Invest brought out last month. So over to you, Catherine.
Thank you so much, Rosie, and thank you to Claire and to the team at Operation NOAA and JustMoney Movement for the invitation. I think I'm just going to speak for 5 minutes, but I think what I'm going to say will complement what we've just heard from James. But I do invite you to kind of maybe take a little step back. I'm sure all of you know about Faith Invest. We work with faith-based organisations across all denominations and geographies, irrespective of portfolio size. And these faith organisations are all asking the one central question: how can our investments express our faith commitments as clearly as our worship and our mission do? We just last week or 2 weeks ago, we published an updated resource document from Faith Values to Investments. Why did we do this? Over the past number of years, we have seen some real momentum. Churches and orders, congregations are divesting, they're adopting net zero policies, and they're exploring positive investments, impact investments, and so on. But in many cases, what we've found is that the underlying investment policy, so the document that guides all decisions, hasn't necessarily kept pace with those aspirations. And that's what our new guide from Faith Values to Investments sets out to address. The guide is designed to help faiths move from that aspiration to structure, essentially, from knowing we care about creation, we care about climate change, for example, to our investment policy defines how that care is implemented, monitored, and reported. So in our guide, we identify 3 practical building blocks for faith-based investors. The first building block is discerning and documenting your faith values. So what does your faith tradition teach you about creation, care for creation, social justice, dignity, stewardship? And then how do these core faith values translate into your investment priorities? The second building block then in our resource is embedding those values into your governing documents. So your investment policy and your investment guidelines, these become the anchor that links your faith theology to the investment manager's mandate. The third building block then is communicating and reviewing. So ensuring that these commitments are transparent, revisited, reviewed regularly with your investment committee, for example, and your manager, and that they're understood by your committee, by the consultants and the managers that you work with. And Claire mentioned the communication piece in terms of the pledge, so that your lay followers, the members of your congregation and of your church are aware and informed about what you do with your investments and the extent to which they're faith aligned. So the resource document includes a number of very useful case studies, including the case study of our project with the Society of the Holy Child Jesus on their mission to become more faith aligned in their portfolio. Just very briefly then, what does this mean in practical terms? If you already have an investment policy, there are a couple of questions drawn from our guide that are worth asking. So, for example, does your policy make your faith foundations visible? Can someone reading it tell if it belongs to a church, not just a charity, for example? Are your values translated into investment criteria? So, for example, if you affirm care for creation, how does that show up in your exclusions, your positive screens, or impact allocations, for example? And then, is there clarity? We heard from James about engagement. Is there clarity around engagement and voting? Do you specify the faith issues that you expect your asset managers to engage on, for example, whether it's the fossil fuel transition, biodiversity, for example, or living wage? And then, of course, do you review it regularly? And this is something that we hope to publish on quite soon. So many faith organizations set the policy once and then rarely revisit it. But as faith teachings and financial practices evolve, that review is essential. So in Faith Invest, we found that small changes can really have quite a powerful impact. And what we mean by small changes could look like, for example, tightening the language in your investment policy, clarifying expectations for your asset manager, or improving the governance links between finance and mission committees. And that can make kind of a big difference to accountability. And I think to your confidence as a faith-based investor. Just to wrap up then, for faith organizations that want quite structured feedback, we do offer an investment policy and guideline assessment, and we've already provided this support to probably a number of people on this call here today and to other faith organizations. And this assessment is a confidential review of how well your current policy expresses your faith values and how then it could be strengthened and enhanced for faith consistent investing. So we look at the extent to which your values are articulated in your policy and in your guidelines. We look at your governance, for example. We look at the implementation and how those investment beliefs are translated into screening, stewardship, manager oversight. And then we look at transparency, so how results are communicated internally and externally. We do provide a report on this assessment process, which identifies some of the strengths in your policies, where are the gaps, where are the opportunities for enhancement. If you are reviewing your policy within the coming months, perhaps you have an investment committee meeting coming up. This can be a very kind of structured and effective way to begin that review process. Just then linking back to today's theme on greening your investments, I think Operation O, I'm sure we'd all agree, have shown quite important leadership in terms of climate action being an act of faith. And I think we're all quite grateful to Operation O and Just Money Movement for spearheading over the recent years. Certainly hope that our resources here in Faith Invest will help you in your efforts to become more faith aligned, particularly in line with climate action. And I know that we have posted the links in the chat, and hopefully you will find all the information that you need there. If you do require any more information on our resource document From Faith Values to Investments, please visit our website, faithinvest.org, and you'll find all the information there. Thank you.
Thank you so much, Catherine, and thank you to all our speakers. We have some time now for questions for the next 20 to 25 minutes. And I'm aware that there are some questions in the chat, which I want to say thank you so much to our speakers, to Claire, to James, and to Catherine for what you've shared today. Thank you to all of you for joining us and for your thoughtful and insightful questions. We're conscious that there's a range of people on the call today with different remits and interests and roles related to church investments, from those with decision-making powers to those seeking to learn and to share information with others. So I hope that you found the presentations helpful. We will make sure the slides are circulated in a few days along with the recording. Please do share them with colleagues. There are a number of previously recorded webinars, as Claire's referred to, which you may like to go back and view if you missed them from earlier in the year. We always welcome your feedback and suggestions for future speakers and webinars, so do let us know if there's something you'd like to hear about in more detail. And on behalf of Operation Noah and Just Money Movement, there are 3 steps we encourage you to take in relation to the Green Investment Declaration, which I'll just leave there with you as a call to action. The first is to evaluate your investments and policy and ensure they are aligned with your faith values. There are lots of tools and support to help you do this, as you've heard about today. This is a really important step in the process of discerning the impact that you want to have through your investments and why. Then encourage you to ask your finance directors to table a discussion on signing the Green Investment Declaration. This may lead to conversations with your fund manager about your intention to move into investing for impact in climate solutions and discussing with them your options for doing so, including how you make the whole of your portfolio work for good. The next step then is to sign the declaration and publicly communicate your reasons for doing so. And we see that public communication as a really important part of the initiative as we seek to build a movement of organisations pioneering a way of viewing and stewarding investments for positive impact. And those stories and case studies are really valuable for sharing with others and inspiring others to join in. And the signing of the declaration is not a final step, but the beginning of a journey as an organisation towards deepening your understanding and your commitment towards investing in climate solutions. So if you have any questions following today's webinar about the Green Investment Declaration or about your organisation's involvement, please do get in touch. We'll be pleased to accompany you and to signpost you to information that you need. Thank you so much for joining us, and we hope you have a good week ahead. Goodbye.